Hey traders, Ryan here. Just going to do a quick recap for crude oil and the S&P today. This is my trade workspace today, so I'm just going to drag and drop things over here. I can't be bothered to load up my other workspace that I do my YouTube videos for. So just going to quickly briefly go through what I was looking at on the day today. Obviously, just starting say with 2 seconds. Starting with the monthly and the weekly bars, like I've been talking about. You can see here that we're trying to find support into 97s, and we see this sell off last month. We opened up this month, and we've just seen two-way trade balance at the bottom of this area. So 97s is key support at the minute. If we look at multiple higher time frames, we can see this 97 sticking out like a sore thumb. And what I'm anticipating here is either a breakout and a continuation down to sort of 94, which is the next level, or we're going to see two-way trade balance come back into the market, and we're going to see the pretty much crude trade within this trading range. You can clearly see this visible on both the monthly and the weekly. So again, if we break below here, then I'm expecting obviously a rotation down to 94, which just happens to be this year's developing value area low area. So, and there's also some key sort of fractal lows. I mean, we've got the low of 96.89, and we've got the next sort of main low that sticks out, which is 94.14. So we'll come out, take long-term stops out of there, clean up these areas, and go from there. I mean, crude oil just continues to seem to be wedging here. So the next sort of real serious trend line is down into this sort of 92, 93 area here. So see how this all plays out. But I mean, again, two-way trade balance is back in rotation, is back on the higher time frames for crude oil. So just something to bear in mind here pushing forward. So on the day time frame, intraday, I mean, you can see here that we are currently bearish, and we found the high for this year, and we sold off, and we've seen this big bounce, and then we see accumulation, and we see selling from this upper. We just couldn't come back into the upper distribution. We found support into the 103.37s, and then we see this sort of 10-day balance here. I mean, I can't be able to count it, but it's about 10 days, and then we see that sell off down to support into the end of last month. And as you can see here, value's just been playing catch up with price. The 5 EMA has just been playing catch up, and we've seen a 4-day balance now into the 97s and this key support area, and who knows, this could bounce, and we could see prices come back up into this sort of this bracket here that we could say is in play, and we could just see two-way trade back in, and like a destination trade back up to 103s, which is highly possible here. But from what we've been seeing, then I'm expecting a break below 97s there. But we've yet to see the disconnect yet. I mean, today we we ran some stops, but there was no follow through into the end of the pit session. So it'll be interesting to see here if we open gap down tomorrow, and we'll just have to go from there. If we open up obviously in range, then we just buy the highs and sell the lows, and try to position ourselves for a breakout depending on what you're doing. But obviously on the daytime frame, it's obviously just buying the highs and selling the lows, and waiting for the breakout and the imbalance to go with that. But regards to today, I mean, we opened up pretty much in the middle of let me just get yesterday's TPOs up. So we had a double distribution trend day yesterday, and just gonna get this up for you. So yes, we had this double distribution trend day. So we had the morning balance, and then we broke out, and we had the afternoon balance, and we pretty much just split these out to as two different trading areas, because these are different areas of acceptance and rejection. So coming in today, I mean, you could have bought obviously off the open and looked for that reversion back up, but that's not what I was trying to do today. I was basically trying to be a seller from the upper and target the low, especially with the 5 EMA playing catch up here. So I mean, we see this basically vacuum up to where business was to be done today, and we see the one time frame in, and we see the crude inventories come out, and this was where we was looking to get short. So I mean, if we look at the 15-minute sort of developing value on the Globex, it shows very clearly here. You can see off the open, which we had nothing done overnight. We just see that vacuum up here to the value area high from yesterday, You can see here that sort of two-way trade came in. We see the volatility pick up as the inventory number come out, and we rotated pretty much up to yesterday's high of day and yesterday's value area high, and this is where you should have been looking to get a short here. So I was starting to sell this area after the report came out. I mean, my first entry was a little bit premature, and I'll just run through that quickly here. Give me 2 seconds. So my first entry, I got short right here. So we see the number come out, we see this volatility come in, we see a blast up to yesterday's highs. I could see absorption on the footprint and accumulation. I literally missed the first X entry, which I was going to get in on the break of the 1.5, and I ended up getting in about 95. So I just hit the bid down, obviously not getting the price I wanted, and I managed to get my first scale out into Vwap here. And then we see this bounce back up. I mean, regards structurally, the structure was still intact here. So when we came back up, I just loaded up again here. Obviously with stops in the same place above the highs, and the 5 EMA was higher, so obviously I was leading off that as well. And finally we see this massive liquidation down as sellers could start to get aggressive here and bid the market down. And I managed to get fully scaled pretty much into this VPUC, and then there's opportunities to start adding here, and so I'm not going to go into that in this video, but I basically, as soon as I got short, I had my core position running. The target was then yesterday's low of day, so we just let that run pretty much. I mean, there's nothing to do here. I know it's really hard to do sometimes to let a market run, but from a logical perspective, you just let the market run. As soon as the market becomes imbalanced like this, then you don't want to get out of this market until we come back into value and we see two-way trade come back into the market. So there's 2 ways you can do this. You can either trade your stop inside value, so literally just keep moving your stop down until it comes back in, or you can wait for a break of the 1.5 standard deviation. It's up to you. Depends on the context of it and the day and your preferences, but I use a mixture of both for my exits on this. But obviously you can see here we just literally went straight down and targets filled here. See some stops getting nailed below this low, so I'm just going to quickly show you the stop run on the footprint here, just as an educational example. So you can see here we came down and we tested the low of day. There's some aggressive selling into the lower day. We still saw this dead man bounce off of the lower day. Up looks like there was more selling to be done here as the market bounced up, and there was accumulation of volume here. And then we see this bounce back down. You can really see here that the stops getting run. I mean, as soon as we broke below the low, there was obviously probably weak longs trying to fade this, and a mixture of longs from yesterday with stops below the low day. And you can just see here that the market literally just hit all of the sell stops. I mean, as soon as the market hits them, they just get, obviously it just triggers a load of sell orders, because all the sell limits are sitting here. So the market comes down, hits the sell stops, and you can see this blast all the way down to here, and then you can see there's some more accumulation. There's probably buyers and sellers are fighting for an inside-outside day, but I just wanted to show you the stop run here. It was very, very clear with these zeros in the place, because it just happened very fast. Price touched the sell stops, vacuum down. So just interesting to see that, and I thought I'd just highlight that for, as like I said, educational purposes here. And yeah, that was pretty much it for crude oil. I mean, very nice day. When we had a 144 tick range on the day, so very nice day. Volatility does seem to be picking up on crude oil. I mean, if we do look at the ATR, I mean, I did show you this the other day. 2 seconds. The ATR does seem to be rising at the moment. So I mean, volatility has picked up, and we see that big dead period as the market hit the all-time high, and we just see that big balance accumulation above. And since then, the ATR has been rising here, so pretty good for obviously July, August. See some nice volatility here. Anyway, I was going to quickly touch base on the SP500 for you guys that trade it, and I'll show you what I saw in a day. So, I mean, this is the current distribution that we're looking at of the S&P here. I mean, we've seen this sort of 1, 2, 3, 3-day balance. Today was the 4th day, but I suppose we'd open gap down into the 100 exponential moving average. So off of the open, you pretty much wanted just to be a buyer. So just look at this on the Globex and go from there. So the S&P opened up at 9:30. As you can see here, the market came in, was it was trying to be in balance below the previous low of day, but on the Globex, but you can see here that there was two-way trade in the market, and you can see the buyers coming in, and like I said, into the open, we opened right into the Globex developing value area low, and this is just a go no go trade sort of scenario, I suppose, where you just literally have to lift the offer into the open with stops below the low of day. You're going to know pretty fast or not if you're right or wrong here, because the market's either going to reject value and sell off and stop you out and you're wrong, and then you look for a short, or the market comes into balance and we see this destination trade and a reversion back to that point of control. And as you can see, it worked out very well here. On the day time frame, we just see a reversion back to this this volume composite point of control here. So that would have been your destination. You would have been looking to get your final target filled into sort of 1922s, which also lines up with the previous day's Vwap on the Globex. So if we look at some of the higher time frame stuff here, I'll do this on this template. It's easier. This is what I use for my swing positions. So you can see here that we had that upper balance and we broke out, we put the all-time high in, and we come back down into last quarter's value area now, which is untested. And you can see here that value caught up with price with the 1.5 standard deviation caught up, and we've seen selling back into this now. So I mean, from what I can see, possible destination trade going to play out to 1840s, which should also be a 50% retracement off of this last sort of fractal low. So I'll highlight that quickly. So obviously before I was looking at this as the expansion, but the expansion and the target got hit. I mean, from what I was looking at before, I'll just quickly show you this. So this was the previous, what's the wrong one? So this was the previous Fibonacci's we had in place because we had nothing else to work with. And as you can see here, we see the range put in, we see the pullback to the 50%, and then we see an expansion all the way up to the target area. And this is where the target area was. Now this has been put in, I'm going to be using this fractal high, and I'm going to be measuring this area. And the 50% area lines up sort of with last quarter's low, value area low here. So obviously if we continue to trade inside this quarter's value and value catches up with price, I'm expecting rotations down here now. So we just have to see how everything plays out. I mean, who knows, we might come straight back up and reject this year's value and put in a new high. Who knows with the S&P and the way it's been the last couple of years. But yeah, for the way things are playing out, that's what I'm looking at for the minute. I mean, we're already rejecting last week's value. This month's value is starting to skew down. So I mean, still not tested that previous month's value. So this is why I was thinking we could see that pullback up hits to here. We'll just have to see what happens. But regards to yearly, you can see on the yearly that we've clearly come back into that balance now, and we're not rejecting the value as of yet. So obviously the destination becomes the mean on the other side of value. So the mean again is since 1860s, so it sort of lines up again with this area that we're looking at. And obviously if we trade lower, then we're going to come back and clean up this fractal low and test the sort of 1800s. So just have to see what happens here on the S&P. But regards to today, the trade opportunity, you should have been getting long the open, and if you didn't get long the open, then you just basically try to find confidence to get long. So I mean, off the RTH, I mean, this was the low, so if you missed this, then you could have bought the pullback to VWAP here, you could have bought the pullback here, you could have bought the pullback here, with obviously destinations to the same area. There was multiple times you could have got in and added to your position. So that's just what I was looking at. And if you're looking to be a longer term short, then you could have been leaning off of the 23s to sell it from last quarter's value area high. Just depends on how you wanted to do it. But as you can see, the 5 EMA is playing catch up here, and we have been one time framing down for 3 days now, and we're clearly in this established range, and very clear on the 240-minute bars here. I mean, you can see the range that we're in, and we've seen rejection above, now rejection below. So obviously if we can't trade below this low, then the expectation is to see rotations back up to 1931. But obviously the 5 EMA will continue to push price down unless it gets broken, and then we start to see retracements back up and potentially clean this gap up here into the 58s and the 52s. We just have to see what happens here. I mean, who knows what's going to happen. Just have to play it day by day. Anyway, I think that's pretty much it. I mean, just a quick look at the composites, and I mean, you could argue you could start this as a new composite now. I mean, we opened gap down, we've got lower overnight trade that's not been tested yet, and so we've got the low into the sort of 19s on the overnight trade. So again, just have to see what happens here, but you can clearly see this is clear buy in excess. We've got a poor high, and we've got this previous distribution to sort of play with now. So in this current range that we're trading in. Anyway, I hope this helps. As usual, if you do have any questions, then please do not hesitate to ask on the forum. Take care and goodbye.